We're talking about arguably one of the most important economic data points right now. Now, CPI for the last few years has been a big one, but I'm telling you what, in recent months, we are talking about huge importance being re-centered, refocused on the jobs data. Jobs data are always important, but it's especially important when people are trying to gauge whether the economy is in a stable spot or not. Jobs are your indicator for sure, right? We wanted inflation to come down. Inflation has had some pretty good progress, but the question is now coming down to the wire in 8 or so minutes. Is the jobs data in the US stable or not? We get 3 pieces of information here today, all of which are very, very important. We get average hourly earnings. Are people getting wage increases as a general theme in the USA? If so, at what pace, right? People are getting wage increases, but are they strong, high wage growth increases, which show very strong labor markets conditions, or are they weaker than that? So we'll see. At the same time, you have NFP itself, the number of jobs added. And guys, we are forecasting just 106,000 jobs to be added. Many are forecasting such low numbers because of the hurricane, which sometimes you get these sort of external forces coming into the picture, right? You get a hurricane happens or some crisis happens and it causes a lot of people to not be able to work, especially when you're talking about the state of Florida, which is, by the way, one of the USA's, most fastest growing states in terms of a state economy. Florida's really key. So if they all kind of had to pack it up and come visit us in Georgia for a few months, then, or a few days, not a few months, it could be, it could impact the data. It could skew it a little bit. That being said, I am going to guess that the NFP report here today is going to be especially volatile because that's such a hard thing to predict. How many people were displaced from jobs or how much was hiring stalled because of the hurricane? That seems just like a very difficult thing to accurately forecast. That being said, like I said, the point is forecasts. Previously, we had 254,000 jobs added. We're forecasting 106. That's going to cause some volatility. Because again, either we're going to hit those numbers and people are going to try and say, oh my gosh, either the jobs market is cooling or it was the hurricane. It's going to hard to tell. Or if they beat them massively, that US dollar may see fresh highs. Take a look at the US dollar with me here as we count down the minutes here. We got about 6-7 minutes to go. Dollar index pulled back the last few days, but has been on a tear to the upside here recently. Big push up, a little bit of a pullback here last few days, but I actually put out a tweet and a post in our Telegram channel, which, by the way, if you're not in the Telegram channel, it's free to join. We got 38,000 people in the Telegram channel. Frank, Julie, and I, we do our best to kind of keep you guys up to date. Frank and I are putting out analysis and different kind of pieces in there. If you're not in the Telegram, join it for free. We'll drop the link here in the chat. So with that, I was pointing out that in the Telegram, I mentioned with the dollar index, we're at a decision point here. We've broken back up above that 104 level. The question is today, are we able to hold this level and push on with this recent rally in the dollar? Or is this going to be the kind of fade the event moment where we start to see 104 crack back down and perhaps the dollar index? Maybe this was one big mega pullback in the dollar. We'll see. Jobs data is really important because, again, if you get strong jobs data, which I'm thinking there's a possibility, especially with an election around the corner. Who knows? Maybe some extra efforts to get more hires done are happening. Now, I say that not as a conspiracy theorist or a speculator or, oh, Kamala Harris and Biden, they're pumping it up. I'm not saying that at all. If Trump was in, he would do that. If I was in, I would do that. If you were in, you'd probably do that. The current standing president is going to do what they can to keep people happy and voting for them ahead of the election. It has nothing to do with party. It is a human nature thing. All right. Jobs data should be dropping here. Dollar index is a bit lower here. That's going to suggest jobs data was sort of weak. Stocks not having a huge reaction here so far. Gold slightly higher. This kind of looks like a, oh my goodness. Guys, what are we looking at? What are we looking at? What? Is that even real? 12,000. Well, I clearly was wrong in thinking that we could surprise that number. 12,000 jobs added compared to forecasted 106. Oh my goodness. That is crazy. That is crazy. And they also revised the previous number lower. So we missed jobs by a pretty long shot. Now, why is this not causing a bigger reaction in the stock market? Well, I'm going to tell you why. It's probably so far because the market's going to say, oh, we're still getting rate cuts. That's crazy. 12,000 jobs. Let's take a look at the dollar. That's kind of a comical number.
This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stock Box, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stock Box gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The Stock Box, the Edge Finder, Pulver Alerts, and the VIP Discord community, as well as our Trading View indicators, are all on sale for 40% off. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more in the description below. Again, 40% won't last forever, so take advantage of this huge sale. Stock Box, Edge Finder, Pulver Alerts, VIP Discord community, and Trading View indicators, 40% off right now.
12K jobs added in a ginormous economy, by the way, guys. What's the population of the US? Like 300 million people or something? 12,000 jobs added in the month of October. Whew, that is okay. So anyways, let's try and make a breakdown of this. Average hourly earnings did tick higher here, but they revised the previous number lower. So people got wages, got increased wages overall, just modest increases. Non-farm employment change, what the heck? 12,000 jobs added compared to a forecasted 106. I mean, they were forecasting for low, but they clearly, I thought, you know, again, this is why you can't predict this stuff. Like I didn't know, and nobody knows, but 12,000 jobs added, forecasted was 106,000, which was already really low. 223,000 jobs. That's the revision from last month's really banger numbers, right? 254,000. So they revised last one's lower. Unemployment rate stayed the same. So that's, you know, arguably okay. So that's why I think you're getting kind of a mixed reaction from stocks. You're not getting a huge bullish, move. This is a 5-minute chart. So mind yourself, like that's not a huge move, right? So nothing huge on the stock market side of things. Gold is rallying slightly here. This would make sense to me, right? Okay, jobs data being soft like that, maybe it was the hurricane, but what in the world? That is kind of interesting to see such low numbers being put up on that.
That is way too low. I think it's great because next week, I think it's next week or next week, we have Federal Reserve rates. So maybe that will clear the road for them to cut, because if the number went a little bit higher, that was going to be something else. And another thing, I think it's good because our stocks, like, they were not performing very well, even though they did actually release some good numbers, but this at least clears the way for them to push up again. We saw Apple, Amazon, Microsoft, they all did actually do their earnings, but they were not really that nice. They were good, but it's like people, they were not really interested in that. But this, I think, is going to help them to move a little bit. I think US30, NASDAQ, they will try to push.
Yeah, and after the big slide yesterday, S&P 500, we'll see if it can hold support here around this 5,700 level. Same thing with the NASDAQ, hit some support here yesterday. Dow Jones had a big flush here the last few weeks. We'll see how markets react here again to this. As you mentioned, the one kind of major positive on weaker jobs data, as weird as it may sound, is the, of course, increased probabilities that the Fed is going to cut rates. The consensus is that they're going to cut for the rest of the year. However, the question is this too much softening or not? I think we're working here, Kenzo, with a canvas that is pretty set up for good economic data, right? You've got a lot of things here that people are kind of feeling confident about. Jobs data may not look good this time, but over the last few months, we've had consistently pretty decent jobs data. At the same time, PMI numbers have been pretty solid overall, especially for the services side of things. GDP growth did miss, so there's some signs of cracking here in the economy. But maybe the theory here is that, well, you're getting a little bit of crackage here, but as long as the rate cuts continue to show up, that could be sort of leverage and liquidity back into the market to keep things kind of running steady. I mean, we have elections right around the corner too, Kenzo. Is that playing any part in your analysis here in terms of gold, stocks, the dollar, etc.?
Yes, but on election, it's tough because it's confusing. You don't really know what the investors want actually. So, and sometimes for this week, it's actually, let's say for this month, until we get the election done, most of the stuff that we follow, let's say your strategy, it might not react actually consistently exactly the way you know it. Or maybe, let's say, some of the news events that we have up to now, or let's say from now going further, they might not really react positively or negatively, or let's say they won't move that much, or they won't react the way we were expecting. Let's say maybe now we get a positive outcome from the news. You might see the news not reacting to anything. Why? Because maybe investors are focusing on the news, on the elections, and sometimes you might fight the market not knowing or not understanding that everyone's just focusing on the elections. You see, so something that can move aggressively, I think, is going to be gold, and maybe gold. Stocks will move, but most likely they will be complicated.
Yeah, I was going to say that it's a good point about just in general. During this weird next week or so, last few weeks really, it's been a strange thing because yes, economic data is still important. Yes, company earnings are still important, but there's this weird extra flavor of who's the president going to be, what is that going to do to markets, and one thing that has been consistently the case, there's not been. Here's the thing, yields should have probably gone down more today, in my opinion, but I think that there's this big upward driver, which we've discussed in the past, which is both presidents are likely to spend a lot of money, which puts a floor potentially on inflation and on interest rates, how far they can come down. Because again, if both candidates, whether you agree or disagree with their policies and how they spend the money, regardless, they're both forecasted to spend a lot of money, and spending a lot of money is inflationary, right? Because the government doesn't have any money. They print it. So when they print it and print it and print it, that is, in my opinion, one of the more practical reasons why yields are also up. They're up on some strong economic data, but it's not been a massive slide of just unbeatable US economic data. There's been some mixed reports in there. I think largely part of the reason here is the election, is the bond market saying, well, hold on just a second. Both of these candidates are going to spend a lot of money, and it is likely to be inflationary.
No, you're right. So you're right on that, and that obviously it has to cool off after, let's say, maybe 2 weeks, 3 weeks later, because they no longer have these rallies. Because on the rallies they actually spend a lot, and on top of that, people who go there, or let's say voters, they also spend when they go on those rallies. So that actually increases inflation. So yeah, I think at the moment things might not react the way we want. It's that time where you can just buy or sell and hold and just relax. But if you just want to get in and get out very quick, it's also good because the market will be moving very quick. But at the end of the day, it's not really that safe because the reaction of the market sometimes might not really link to any, like we might see the market moving, but when you check if maybe there is any data relating to that movement, you might find that there's nothing.
Sure. Yeah, no, it's it is sort of a weird, strange time. And I saw somebody comment on one of my videos recently that they're gonna take a break until the elections pass. I think that is a certainly for some might be the right call. Maybe it's better just to stay out of the way and wait for some of that to pass, because there are some erratic moves that are going on. You've got, one way to make sure you everybody keeps this on your watch list. The VIX is still at 22, guys. A 22 VIX is not incredibly low. So even though the market has been drifting higher, you've got a market going up, but a VIX staying high. This is telling you that the bond market is charging a pretty good premium here currently to buy protection, buy puts on the market, buy calls on the market. It's charging a bit of a premium there. And when that is happening, what that's telling you, and a high VIX is happening, it's saying bond sellers want higher premium in order to sell you a put or a call, and that's telling you that the market thinks there's potential big movements coming. So when the VIX is low, the market thinks there's not big movements coming. When the VIX is high, the market thinks there's massive market movements coming. So definitely one to watch or add to your watch list if you don't have it already. The other thing, kind of the same tone, is as we just discussed, gold, which is up and away this year, actually strongly outperforming the S&P 500 and the NASDAQ, despite them having great years. It's interesting. You don't really hear a lot about gold on the television. When you listen to stuff, it's always, stocks this, Nvidia that, but gold has had a really incredible year. I've tried to get in early on, or I got into the euro on the short side. I was just a little early. Well, actually, maybe a lot early. But it's kind of one of those things. The euro has been such a downtrend. This one's been tricky because I've been wanting to short it, but like just no pullbacks, right?
Yeah, no, it's been very difficult.
Yeah, it's been like this just perpetual downside move. I took a stab on the 4-hour chart, and sure enough, I did a great job at pretty much calling the bottom. But I mean, it did go down initially, but then spiked off of that low. But we'll see how this plays out. One key level I have on the euro is this one right here, 1.1020. It's a pretty obvious level of broken support, but it's a ways away. And I'm not going to, that's not the only place I would try on the euro. If I can get good setups on pullbacks, I like that idea you were marking up as well. So we'll see. What do you think about that jobs data? That I saw you come on and kind of laugh at it. It's kind of funny.
Yeah, I mean, it reinforces the rate cut narrative, but that's kind of already been in play. As far as I'm aware, the 25 basis point cut, it's already priced in. It's expected. The CME FedWatch tool hasn't changed really. The hold, it was 5%, now it's 0%, so not much change. Yep. 0.6% on a 50 basis point cut is not really that relevant right now. So in my book, although it's a bad number, nothing's really changed in the sort of broader landscape of rate cuts and things.
Yeah, and that's the thing is, the thing is, I was looking at this jobs number, and it's like on the Edge Finder, you can't even see that. I'm like, where's the data point? The data point's missing. And then I was like, oh wait, no, it's way down there. Just a complete whiff in terms of jobs data. Frank, another one of our traders here at A1, sent me a DM. He's like, is that even real? And I was like, I don't know. They're probably going to revise it like crazy, like they've been doing all year. Not a good year for the Bureau of Labor Statistics. They've been all over the place with their data, and people are probably not too happy with that. But forecasts were way off. But I don't know, man. We'll see how that plays out. I agree with you. It's probably just kind of stay the course with the rate cut game. It's probably still coming. That being said, at the same time, unemployment rate remained unchanged. So, kind of a mixed bag there. It would be a different story. You'd have a really ugly day in the markets if you had like huge jobs miss plus unemployment rate spiked. That'd be dollar down massive. And then I'd really feel some FOMO on the euro.
Yeah, no, that would have been a bit of a mess. But there's not much we can do really at the moment other than wait for these pullbacks on euro dollar and pound dollar really.
Yep. Speaking of which, in terms of news, we got about 10 seconds to go. We'll skip our breaking news here today, or for this one, but we've got ISM manufacturing PMIs. That's why I hopped back on the call, coming out here in just a second. Let's see what these bring. Could be interesting. Manufacturing, of course, is a considerable chunk of the U.S. economy. Came in light, 46.5. Not as nearly as big as services PMI. I make that point every month. But manufacturing data just came in slightly lighter than forecast. Forecasts were 47.6, 46.5. This is more contraction in the manufacturing component of the U.S. economy. This has been going on for like years now, by the way. For the last few years, we've barely ever gotten above 50, which for PMI newbies, anything above 50 is a show of growth, and anything below 50 is a sign of contraction. We've seen the manufacturing part of the U.S. economy contracting for years. Services, however, has been strong. So we've got services coming on Monday. One of the most, in my opinion, one of the most important pieces of economic data points to watch is the U.S. ISM services services PMI. Got that on Monday, just shortly before the big Fed meeting stuff. So we'll have to keep an eye on that. Let's see if that did do any movement on the market. We got dollar index, 5-minute chart, nothing too big. Let's see what else. Bitcoin's up still, oil flat, copper. Do you have any commodities positions right now, James? Do you have any copper, silver, gold, oil?
I was in silver this morning. However, that was unfortunately stopped out during the NFP reaction. But I'm still considering re-entering this one. We'll see. I mean, I'm not sure I really want to get into too many dollar positions, especially on commodities, before we have the elections. Because as I was saying earlier on stream, if Trump wins and these tariffs start affecting China, which is likely, we'll see the Australian dollar start heading to the downside, which is obviously linked to commodities, and it obviously ripple effect in the markets. Maybe not silver so much, but copper and things. So it'll be I'm sort of on the sidelines for now.
That's a great point. I mean, commodity prices, depending on how the market interprets what those tariffs could mean, as well as how they potentially actually start to impact or not global, trade, etc. If we think back, I'm actually just curious. Let's go back in time for just a second to 2018 on the price of copper, when we had the trade war stuff going on with Trump the last time around. You can see copper prices had a big drop that year. So, we'll see. That, of course, does kind of poke around the international trade stuff. So could be something that we're talking about next year. We'll see, James. I mean, there's always something, of course.
Yeah, exactly. There's something I wanted to ask you as well, Nick. What do you think the reaction to gold will be after the election? So I know that obviously gold's been pumping quite nicely due to elections, obviously allocating capital towards risk-off assets. Do you think post-elections will be more of a risk-on play for gold? Do you think we'll see lower prices, or do you think we'll continue the steam train to the upside?
Well, I was thinking about that actually this morning. I think that there's sort of two parts to it. Yes, I think that there is a premium being applied to the price of gold right now. Like, people are paying a premium because of the uncertainties with the election, Middle East, yada, yada, yada. But then there's also the way U.S. elections function, which is there's not like a clear, like on November 6th, we won't know for sure who the president is. And then there's like this period of time where everybody's kind of like, what's going to happen? question marks. So I actually think that, you know, until the actual next president is, you know, given the keys, basically, I think gold will keep that premium. So even if, you know, at this on November 6th, November 5th, there will probably be volatility in the price of gold. But I don't think that there's just going to be a complete, like a balloon popping loss of premium in the price of gold due to the election. Because I think the uncertainty does not go away on November 6th. I think the uncertainty is there until, you know, things truly settle into 2025. So I don't really see a short-term massive downside catalyst on November 6th after the, you know, election night. I kind of lean more towards probably should keep a little bit of a premium for a little while here until some of it is truly behind us. So that's kind of my opinion on it. I think 2024, the rest of gold, the year for gold, still looks most likely stronger. Fed's still going to cut rates. They're going to, you know, see the presidential election stuff. That being said, once some of these question marks get answered, yeah, then I think gold very well could be discounted some from its current premium levels.
Yep. Okay. Yeah, sounds great. Cool. Yeah, we were talking about that in the Discord this morning. So yeah, just wanted to get your thoughts as well.
Yeah, it's an interesting one. Gold is pumped so far that it feels like it needs to have this sort of deflating event at some point, and it probably will. It's just that still is a difficult thing to time. I don't think it's as easy as November 6th. Okay, we're done. I think it's you know, what's going to happen in the Middle East, and what if, you know, even if Trump is given the keys, what does that actually mean for global politics? You know, and I'm not trying to get into like personal politics in any way, but if you think about, like, you know, people like to point out that under him there was a lot of peace, but at the same time we're in a different environment than we were when he was president last. You know, people don't just follow the rules of the US president completely. Like these countries, Israel, you know, Iran, Taiwan, China, they all have their own agendas and things that are going on. So it's not completely the president's fault or ability to control global politics like that. So I don't know. And the trade war thing, if that comes back, we'll see. I mean, there's interesting times. I think regardless of who you get as the president, there's going to be concerns and there's going to be things that people are excited about. That's every time how it is. And in terms of just purely a market's perspective, I do think that the handing over of the keys to whoever it is, whether it be Trump or Kamala Harris, will be a welcomed thing by stock market investors, because they'll say, okay, great. If it's Kamala Harris, great. We know we can do this. And if it's Trump, okay, great. We know we can do this now. Like, I think it's just the uncertainty, the unknowing of who the president's going to be is worse than actually just getting one of them.
Yeah, no, I completely agree. It's that, yeah, the uncertainty. Investors hate it. So,
yes,
yeah.
For sure.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.